Last week, I covered Adobe on my channel and shared my views on if the stock was looking attractive before earnings. In that video, I pointed out that Adobe was truly trading for a price to free cash flow of roughly 27, which is below the company's 10-year average of around 34. This made Adobe stock look cheap relative to how the market has historically valued the stock. However, Adobe has been guiding for roughly 9 to 10% revenue growth, which as an individual, I do not think is enough growth for a 27 multiple. So to me, it was still too expensive for me to buy. I also asked you if you wanted me to cover Adobe's earnings this week, and I got an overwhelming yes from the audience. And, well, Adobe did report its earnings today, and the stock is up 16% in after-hours trading now. So in today's video, I want to quickly go over Adobe's earnings and discuss why the stock is up so much right now, and if I think that this huge spike is warranted. Before we get into the video though, I want to let you all know that I will be attending the Blossom event in Toronto on June 25th. I was invited to be on two different panels at the event now, so I will be speaking around 5:30 and around 7:30 p.m. and I will also be hanging out at the event all night. So if you would like to come and meet me in person, then you can get your tickets to the event via the link in my description. And if you have a copy of my book, The Fundamentals of Investing, then make sure to bring it along, as I will be happy to sign all of your books in person. But with that being said, let's now hop into the video. As always, I have screenshots from Adobe's earnings that we are going to go through. However, I think that it makes the most sense to take a look at what Adobe was guiding for this quarter, last quarter, if that makes sense. So last quarter, Adobe was guiding $5.25 to $5.3 billion in revenue for the quarter that it just reported. Now, if we take a look at the actual quarter results that Adobe just reported, we can see that Adobe achieved a record revenue of $5.31 billion. So in terms of revenue, Adobe did hit above their high end of the guidance by about, what would that be? $10 million. So they beat their own guidance, and I think that this is the main reason right here why investors are so excited about this earnings report and why the stock is up 16% in after-hours earnings now. Adobe did also increase its guidance for the next quarter and for the full year of 2024, which we will get into a little bit later on in this video, but that's another reason why I think Adobe stock is up. But continuing on, this says, Adobe delivered outstanding Q2 results, positioning us to raise our annual targets. Adobe achieved revenue of $5.31 billion in the second quarter of fiscal year 2024, which represents a 10% year-over-year growth to revenue. Diluted earnings per share were also $3.49 on a GAAP basis and $4.48 on a non-GAAP basis. GAAP operating income in the second quarter was $1.89 billion and non-GAAP operating income was $2.44 billion. Cash flow from operations were also $1.94 billion, which is actually down about $200 million year over year. So it seems like Adobe's earnings per share and revenue grew very nicely year over year, but the operating cash flows did actually slightly decline. Now, if we move on to Adobe's balance sheet right here, we can see that cash and cash equivalents are sitting at $7.66 billion, which is up roughly $500 million from the beginning of the year. So Adobe's cash position has been increasing. We can also see that the total current assets are now sitting at $11 billion, which is essentially flat so far year to date. However, if we take a look at the total current liabilities, we can see that they are about $9.5 billion, which is up roughly $1.2 billion so far year to date. However, with Adobe having $11 billion in total current assets, I do think that the balance sheet is still strong because they do have more current assets than liabilities, and Adobe is a free cash flow machine. So I don't think that Adobe is in any financial stress or anything like that. And then at the very bottom here, we can see that total liabilities are sitting at $15 billion now, which is up roughly $2 billion so far year to date. So overall, it does look like Adobe is actually taking on some liabilities or some debt right now, while its cash position is not really growing. Now, if we head over to the cash flow statement, which is my favorite financial statement, this does explain all of these numbers, but let's just start from the top right here. So we can see that stock-based compensation came in at $467 million, which is up about $30 million year over year, or about 8% year over year. Then if we skip down quickly to the net cash provided by operating activities, we can see that they are sitting at $1.94 billion for the quarter, which we already saw. And last year for the second quarter, they were $2.14 billion. So you can see that the operating cash flow did actually decline by about $200 million year over year. Now, it looks like the major reason for the decline was changes in deferred revenue of about $424 million versus $96 million last year. And these are both outflows of cash. So it looks like Adobe received less deferred revenue in the second quarter versus last year, and this is actually causing the operating cash flow to decline by about $200 million year over year. Overall, I do not think that this is a bullish thing to see, and this has also been one of my concerns for Adobe, is simply that its operating cash flows are not growing with the revenue, and this has been kind of the case since about 2021. So we're on the third year now of Adobe's operating cash flows not really growing, as we're going to see here in a little bit. But moving on, we can see that Adobe's purchases of property, plant, and equipment, which is also the capital expenditures for the business, was only $41 million in the quarter. And this is why I love software companies, because their capital expenditures are so incredibly low. I mean, think about this. Adobe produced $1.94 billion in operating cash flow, and it only spent $41 million to do this. So almost all of that operating cash flow is actual free cash flow for the business, and in the quarter, Adobe did produce $1.9 billion in free cash flow. Then we can see that Adobe repurchased $2.5 billion worth of stock. Now, what's interesting is this $2.5 billion of stock is more than the free cash flow that the business generated. So the company did dip into its cash position by about $600 million to buy back stock, because it did buy back more stock than it produced in free cash flow. So then the question is, how did Adobe's cash position raise by $500 million so far year to date? And the answer is because the company took on about $2 billion of debt in this quarter. So the company is taking on more liabilities. That's also why we saw the liabilities increase on the balance sheet. And this is also how Adobe was able to buy back so much stock and actually increase its cash position as well. So it actually kind of looks like Adobe is taking on a little bit of debt right now to buy back shares. And with the stock not really being undervalued, at least in my own opinion, I don't love to see this, but other people may argue otherwise because Adobe is trading, or was trading, below its historical average price to free cash flow multiples. So if you look at it from that perspective, this does kind of make sense, but you guys let me know down in the comment section below, what do you think about Adobe's capital allocation this quarter? And then down here at the bottom, we can see that the net change in the cash and cash equivalents was $1.4 billion due to them taking on about $2 billion of debt in this quarter. So yeah, that's the story of Adobe's cash flow statement this quarter. Now this next screenshot right here comes from Adobe's Q2 investor presentation that covers the earnings that just came out. And this is a really nice summary in my opinion. So here we can see that the total revenue increased by 10% year over year relative to the second quarter of 2023. We can see that GAAP earnings per share increased by 24% year over year, and non-GAAP earnings per share increased by 15% year over year. So in terms of earnings per share, Adobe did see some pretty strong growth. However, again, we can see that the operating cash flow growth, which is my preferred metric, operating cash flow and free cash flow are the metrics that I use for Adobe. We can see that this metric did decline by 9% year over year. And this is really what I mean. Adobe's revenue is growing, but its cash flows are not growing with the revenue. So now let's take a quick look at Adobe's outlook for the next quarter and for the full year of 2024 now. So for Q3, Adobe is projecting revenue of $5.33 to $5.38 billion. Right in the middle there is about $5.35 billion in revenue. And I did do the math here. And for Q3, that is 9.4% year over year revenue growth. So Adobe is projecting another quarter of about 9% year over year revenue growth, which I don't think is really showing any acceleration in Adobe's overall revenue growth. And it is arguably showing that the revenue is actually still decelerating, because in Q2, they just posted a 10% revenue growth quarter. So yeah, it's interesting. Well, it's good to see that they did increase their overall revenue guidance, but it wasn't a massive uplift, if you know what I mean. Then in the bottom table here, we can see the 2024 targets for revenue is $21.4 to $21.5 billion. So right in the middle there is $21.45 billion in revenue. Now I also did the math, and this is 10.5% year over year revenue growth for the year of 2024 relative to 2023. So maybe Adobe is projecting to have a stronger fourth quarter to finish off the year, but overall the company is expecting about 10.5% revenue growth for the year of 2024. So that is about how quickly the company is growing right now. All right, so now let's head back over to Stock Unlock, and let's take a little bit of a deeper look at Adobe's financials right now. So here we can see that Adobe's operating cash flows have been declining in the most recent quarters pretty significantly. And in the trailing 12 months now, I did the math, and Adobe is producing about $6.58 billion in trailing 12 months operating cash flow. But we do have to remember that in the first quarter, Adobe did have that one-time $1 billion payment to Figma for the acquisition termination fee. And this was the fee that Adobe had to pay in its contract because the acquisition of Figma did not go through. And this was a one-time hit to the company's overall cash flows and profitability. So I do think that it is fair to take out this $1 billion expense going forward, because this was a one-time payment that should not affect the company going forward. And if you are an investor buying the company today, that one-time payment should not happen again in the future. So on an adjusted basis, Adobe has now produced about $7.58 billion in trailing 12 months operating cash flow now. Now, as I briefly said earlier, my concern with Adobe is that its operating cash flows and free cash flows are not growing with the revenue. For example, we can see here that in the third quarter of 2021, Adobe produced about $7 billion in trailing 12 months operating cash flow. And now in the second quarter of 2024, Adobe's operating cash flows are only at about 7.58 billion, which is growth of roughly 6 to 7% over the past 3 years. And you can kind of see right here that the cash flows have not really been growing. In fact, if we head over to Adobe's operating cash flow margin right here, we can see that it did peak at 48.5% in the second quarter of 2021, and now it has been declining and has come all the way down to about 34% on a GAAP basis in the trailing 12 months now. So you can clearly see that Adobe's operating cash flow margin has been declining, and this is why Adobe's operating cash flows are not growing with the revenue. So personally, I would like to see Adobe's cash flow margins start to increase and start growing with the overall revenue as well. So now let's talk about Adobe's price today and after hours trading. So the company was worth about $206 billion in the stock market before the market closed, and it is now up 1.1648% in after hours trading. This means that Adobe's market cap in after hours trading now is about $239.95 billion, or basically $240 billion if we want to round this up. Now, in the trailing 12 months, Adobe has produced $7.28 billion in adjusted free cash flow when we add back that $1 billion acquisition termination fee. This means that in after hours trading now, Adobe is trading for a price to free cash flow of 32.97 if we want to round up. Now, if we head over to our freeform tool right here and we take a look at Adobe's historical price to free cash flow, we can see that its 10-year average again is that 34.2. So Adobe is trading slightly below its 10-year average price to free cash flow right now, which could arguably suggest that the stock is trading right near fair value relative to how the market has historically valued this stock. However, again, for me, a 34 price to free cash flow for about 9 to 10% annual revenue growth is on the too expensive end. As I explained in my last Adobe video, I have stocks in my own portfolio that are trading for a 12 price to free cash flow or price to earnings ratio, and they are growing revenues at 20% annually. So when I take a look at the two businesses and when I'm allocating capital in my own portfolio, when I take a look at Adobe, I see a 33 multiple for 10% growth, or I can buy another stock at a 12 multiple for 20% annual growth. So in my opinion, it's a no-brainer that there is more attractive stocks in the market right now than Adobe. And for those reasons, I do not think that Adobe is looking attractive in after hours trading for me personally. The new and increased guidance that they put out is simply not enough for me to want to buy this stock in after hours trading or at its current market cap that it is selling for now. It was just a slight upgrade, and it's not enough to warrant a 16% increase in after hours trading for me as an individual. But when I'm taking a look at Adobe's historical price to free cash flow, again, it was trading for a 27 multiple before earnings came out today, which is quite a bit lower. It's about 20% lower than its historical averages. So this increase in the stock price of 16% in after hours trading really just brought Adobe back up to how the market has historically valued the stock. And I do think that when you look at it from that perspective, it does make sense on why the stock is up in after hours trading. But me as an individual and more so as a value investor, it's just, it just made the stock a little bit more expensive for a pretty small increase to its guidance for revenue. So yeah, it's not enough for me to want to buy the stock. I understand why the stock is up in after hours trading. It's just how the market is. But yeah, for me, it's not enough for me to want to buy the stock today. Now, another really interesting thing that I want to point out in this video is that back here in 2015 and really all the way to 2019, we can see that Adobe's trailing 12 months revenue was growing at about 5.7 to about 6% on a quarterly basis. And we can see that Adobe's trailing 12 months quarterly revenue growth has come down to about 2.7% now. And what this means is that Adobe's quarterly revenue growth has been cut in half since about 2019, and its revenue growth has been slowing down quite significantly. Now, in my opinion, this lower revenue growth should warrant a lower price multiple for Adobe. But the market, for some reason, has not lowered Adobe's price multiple despite its revenue growth slowing down significantly. And in my opinion, this is why the stock is looking much more expensive at its historical average price ratios, because again, the stock is trading for its 10-year average historical price to free cash flow, but its revenue growth has been cut in half since 2019. So it seems to me at least like the market has not really adjusted Adobe's price multiples for the slower growth that the business is now seeing. And maybe this is because the market is thinking that Adobe is going through a slower revenue growth period today, and then Adobe's revenue growth will pick up at some point in the future. But I just don't have that high of a conviction on Adobe, and I'm really going off of what the company is projecting for this year. And I don't really know what is going to cause Adobe's revenue to start accelerating again in the future. But in my opinion, it does kind of look like the market is expecting Adobe's revenue growth to start accelerating again at some point. But again, I just don't have the conviction. So to me, the stock does still look quite expensive in after hours trading. And that's my overview of Adobe's Q2 earnings results that just came out today. So if you enjoyed this video, then please remember to leave a like on it because it does really help out my channel and I do really appreciate it. And also, just as a quick reminder, if you do want to come and meet me at the Toronto event on June 25th, then I will put the link in the description right at the top so you can go and get your tickets. I believe they're about $20 US or about 27 Canadian. So it's a pretty cheap price, and there's going to be 600 investors coming to this event and a lot of other YouTubers. So it should be a really good event, and I will sign your books in person as well, and you will get to meet me. It's going to be awesome, and I hope to see some of you there. But that is going to wrap up the video for today, everyone. So thank you so much for watching. As always, I truly do appreciate it. And let me know your thoughts down in the comment section below, and I hope to see you all again in my next video.